Testing, 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 testing. JB here. Hope everybody's having an outstanding morning. Actually, give me 1 second here. Let's see. Okay. All set. Just going to be really quick. It's 9:14, 20 seconds. We have about 60 minutes to the open. Going to talk really quickly. Well, not really quickly. I pretty much clear is the one I want to talk about. Ticker YOU. Talk a little bit about SSYS, a name I've played many, many times over the past 5 to 10 years. Earnings after the close yesterday. Nice, solid earnings. The company looks like they finally turned the corner. Talk a little bit about the S&P and the SPY, and IBM and BPT. So really quick. So first, ticker YOU is the first one I want to talk about. Clear is the name of the company. Here's a name I've seen. You go to travel and you see these kiosks. People cut. If you're a TSA pre-check, you kind of have, an easy pass through security. And then you have Clear. And Clear, it's pretty much they scan your eyes, your retinas. They do fingerprints, and you can get through security very quickly. And then you combine that with TSA PreCheck, and you have a very seamless experience going through the airport. So when I first saw that coming, a couple airports over the last couple of years, I saw it looks pretty interesting. I saw some advertisements, but now you see they've expanded quite a bit. But I always looked and I said, how is this company going to be profitable? So then yesterday morning, someone posted an entry, and then I looked at the earnings and said, wow, phenomenal. 100% year-over-year growth. They're growing their base over 100%, and huge margins, no debt, $663 million in cash. They announced a 100 million share buyback. Just a really great story that if we weren't in the current environment, the stock's probably 70, $80. So definitely a name I'm going to be watching in the coming weeks and months, especially as this travel boom it's really going to hit hard in the summer. It's going to be crazy with travel. Other things you start to look at, and I put the chart of DocuSign up there. I start looking at Clear. I'm like, this DocuSign is the John Hancock, right? So they're taking the John Hancock signature and taking it digital. And here's Clear, and Clear's taking the manual TSA agent, or at a venue, a concert, or a football game, or some other kind of venue, and replacing, taking the physical person who you have to pay whatever an hour, and making it digital, so it's a seamless experience for the person who has Clear, and then it helps on the cost side for the people who are hosting the event. So it's I think there's so many more opportunities for them, especially as they're rolling out in the airports. Then I think other folks will start to see this as an opportunity, say, wow, we can probably streamline people getting into our events and things like that, and it's just going to become mainstream. The NFL actually has $100 million stake in the company before they went public. The Raiders use their Health Pass system, so Clear also has the ability to, you can put your vaccination records in the Clear app, and then you can enter stadiums back when people had to have be vaccinated to get into events. But that's definitely an opportunity as well, an addressable market that they can go after. The New York heart surgery, I forget the name of the actual hospital, they partner with them as well. They allow people to download the Clear app to gain access to the hospital. They don't have to show any other records, things like that. So just a great opportunity. I think as they continue to scale, there'll be a lot of other opportunities that will increase their total addressable market. Companies, I guess, $3.6 billion, $660 million in cash. So 70% of the valuation is held in cash, which is a good sign, especially in this environment where we have names that are laden with debt. And as they continue to kick the can down the road, it's going to be more expensive to finance their debt. Multiples go down. The flip side, here's Clear, has no debt. And so they can use that cash to return to shareholders, which they did the buyback, and they can also use it for acquisitions without having to worry about raising debt, doing an offering, things like that. So look at it, also has a 27% short interest. So just a great story. The more I was reading about it, the more I liked it. And I was watching yesterday. Would have been nice to time it a little better at the open, but I think it gets over 35 this week and possibly into the 40s in the coming weeks, and probably higher if the market finds a bid or at least support around here. So that's that. That's YOU is the ticker. Definitely name I'll be talking about, and probably I'm going to try and put a post together. There's so much to write about. There's other partnerships they've done, and if you listen to the conference call, just very bullish. what they're talking about, and they've already talked. They already said that their travel is above post pre-pandemic highs. So it's only going to get better as the months and quarters go by. I think it's a great story, and I think it could go higher regardless of what the market does. So that's ticker YOU. SSYS, a great quarter. It wasn't like huge year-over-year growth. They're still in the teens in terms of revenue growth, but they saw growth in all their businesses. They also announced a merger of their MarketBot line. So there's a merger. That was last week. That saw the shares spike a little bit. And last quarter, SSYS reported a phenomenal quarter as well. The stock spiked. I think it was up to $28, and then it sold off, reversed all the gains, closed in the red. But I think a lot of it has to do with just the type of market we're in. If it can find a bid here today, I might look to get some calls to play for move to $20 or so in the coming days and weeks, maybe weeklies for this week and maybe some June strikes. Just because, like I've said many, many times over the last couple of years, I think this is a sector that's not going away. If anything, as SSYS continues to gain traction, their consumable side of their business picks up. So, meaning they sell their printer, and then they have the consumable side of it that's just recurring revenue. Not saying it's the Gillette razor kind of business model, but it's similar to Intuitive Surgical. As they sell more Da Vinci machines, their procedures are just recurring revenue. At some point, that's going to increase their margins, help with their growth, things like that. So at some point, hopefully today, if it holds around 1850 or so, I'll look to add some strikes there. Not going to talk too much about BPT. Oil's over 110 a barrel. Here's a name. It went ex-divvy last month, 1720, which is not really the high because you take the divvy out, it was 18 and change, but 1720 is the multi-year high. If you can get over that in the next day or two, I think it's going to head over $20 very quickly. Still have my June strikes, so I'll continue to hold those. And what else do I have here? Oh, IBM. So IBM's been very frustrating. Every time the market sells off a little bit, IBM seems to find a bid. But then on the flip side, it seems every time the market rallies, IBM doesn't find much strength. Yesterday, the market, well, besides the Dow, the NASDAQ down over 1.2%, well, down 1.2%. S&P is down nearly 0.4%. And there's IBM in the green, nearly at highs, 136 and change right near the end of the day before pulling back into the 135 area. I think if it holds 136, it's going over 140 this week. Still have a couple of my weekly 140s. Well, they're weekly because I held on to them. Those are freebies. And then I still have my June 150s. I don't know if I'll add anything on IBM, but it seems like people are catching on to the idea that maybe this is a name that might find support and head into the mid 140s, 150 in the coming weeks and months. That's kind of the thought process there on IBM. But funny, you see these growth tech names just getting destroyed yesterday. MDB down, 10% or 9%. Teams, Zscaler, all these growth names, and then you have IBM in the green. So it's funny how things have shifted a little bit. But that's what happens, I guess, is people trying to hit the reset button on the growth names, and the value names become more attractive. And that's kind of where IBM sits in. That's that on IBM, BPT. The SPY holds 400, I think that bodes well. Closed right at 400 yesterday. If it holds, I think we're up to 419 before the next move. So, well, I mean, it's a decent move to get up to 419. 4.5. Well, from here it's only 4%, or 3.5%. But if we get up to 419, then it's a matter of, do we get into the mid 420s before the next move down? Do we just fall from there? That'll be the question. A lot of Fed speakers today. 2 o'clock, we have Powell speaking at the Future of Everything Festival hosted by the Wall Street Journal. Who knows if he's going to announce any kind of game-changing thoughts on policy changes, or you talk about the possibility of a 0.75% rate hike in the future after the next Fed meeting, because he already said they're not doing anything more than 0.5% in the next meeting. So those are things to watch. I don't think he's going to say anything too mind-blowing. So that's that on Fed. Bullard was this morning at 8 a.m., and there's a couple other Fed members speaking today. So I'm sure there'll be headlines that come up, probably hawkish ones, probably saying, oh, inflation is high, which, I mean, obviously that's not anything new. Hopefully they don't put their foot in their mouths and the market can find some support here. And maybe we have a good day here. So anyway, that's that. I'm trying to think of any other names here. Roku on the heels of the Netflix upgrade yesterday. If you don't know Michael Pachter, he's the Wedbush analyst back when Netflix was like 60 and $70 before it split. Maybe it's 2012, 2011, I forget. I used to be like a troll on Michael Pachter. I felt kind of bad, but I'm like, how does he not see that Netflix is going to be a huge deal? And he would downgrade the stock, had it sell, underperform, and I would troll him on Twitter, and he actually had like a great response. He says, "Hey, I'm just here to provide color." He was respectful, and after that, I have a lot of respect for the guy. So he remained bearish for quite a long time, and then finally upgraded to neutral a little while ago, and now he actually upgraded the stock yesterday to buy or outperform, which was pretty shocking. So I'm not saying that it's going to mark the bottom in Netflix, but for me, I continue to think that Roku is the way to play the streaming side. I think they benefit from, even if Netflix loses subscribers, I think they benefit because of the competitive landscape. The more players they are in the streaming side, the better it is for Roku. The more views they get, the more dollars are spent on advertising in that space. So I think it just bodes well for Roku, and I won't be surprised to see it trade into the 100, 110, 115 in the coming days. It broke over 100 at 101.55 in the morning yesterday before closing at 93.76, so it's volatile. But if we can get back over maybe 98 or so, I'll look to get some weekly strikes to play for a move into the 105, 110 range in the coming days. And I think that's it, folks. We have 4 minutes to the open. I'll be back. Let's have a great day. Rock and roll.